Mercedes a good team.
All right, ladies and gentlemen, welcome back to another episode of Chart Talk. Bringing you hits every week. All right, so we got the market back at highs. We're in this range. We had a pretty crazy day yesterday, although a 15-minute. And you can see the market just absolutely plummeted midday yesterday and then recovered. And, you know, we're still in this uptrend until we're not. I know it was a scary day, but, you know, we're still back at highs. We're 0.5% off all-time highs. We're at the top end of this range in the SPY. We see this uptrend, and we're not seeing the push when we get to the top end of the range. We see that buying when we get to the bottom end of the range. We're not seeing the push as much at the top. So that's really what I've been watching. How about you, Ben?
I think the only one thing to really highlight, if you want to pull up that chart I put in the email, the small caps. Again, we talked about it kind of last week and in the big picture where, again, when no one cares about it, no one wants to buy it, but when it's up 100, 120% in a year, that's when everyone wants to now find all the new small cap setups. So with that being said, we've just started to be a little bit more defensive in upping those stops versus the weekly low in the small caps, which is versus that 208 stop. So we're going to keep trying to ride it higher if it wants to go higher, but if it does want to turn and maybe correct, we'll get out and lock some profits in below 208. And then with that, if you want, we can jump into some of the member ideas.
Yeah, let's jump.
All right, we have Tom. He's looking at LEG up through this 44/45 area.
Yeah, nice macro pattern here. It doesn't look like it's ready quite yet. Probably waiting until earnings, but nice level when it gets up there.
All right, we have a few from Carly B. He's looking at, first one is this McDonald's up through this 215.
Yeah, I love the chart. The only problem is they have earnings in 2 days, so pass till after earnings, but definitely on the radar after those earnings.
All right, next we have UNP up through 208.
If it can get up there, it's failing pretty badly today, so it looks like it needs a lot more time. Up through 208 in time, looks like a nice little support buy, but right now it doesn't look that good.
And then lastly from Carl, we have Visa up through
Visa?
203 versus the 195 low.
Boy, loves them big caps. Yeah, I mean, as long as you give me to this pivot, but again, they have earnings January 28th, so, you know, wait till after those earnings at this point.
All right, let's see. Next we have, 1 second. We have Abby looking at AL through 44.
No, I don't like this. Just not much of a pattern here. It's kind of a really choppy, sloppy resistance area. So I don't really like this one.
Okay. Next we got Ricardo's looking at LW through 80.
Yeah, that one looks nice. Just flag, clean level. Name's been somewhat strong the past few months. Flagging from that 80 looks pretty good there.
All right, let's see. Next last up we have Tyler Kenny looking at XPEV. He's looking to get in verse 50.
Yeah, I saw people buying this today. They were buying that 55 when it made this new high. You want to see it translate. You want to see some follow through off this today. So yeah, maybe in time. I'm not really sure. This could use a little more sideways. These electric vehicle names though don't like to wait around though. So not really sure. It's not giving the follow through yet today. You know, and we're looking like Ride is an EV name and Workhorse is an EV name. We see these names going off, and they're U.S. based. This XPeng is Chinese based, and the reason that all the U.S. names are going off is because Biden said he's making the whole government fleet electric vehicles. So that's why, you know, let's gravitate towards the U.S. based EV ones for now.
Okay. All right, we have a few questions from members. First one is a little bit more geared towards me, and then the other two are more for you, so I'll dive in first. One of the members had a question regarding the sector rotation and if they recommend putting it in a separate account or just buying all those sectors in the same account they trade with. We recommend keeping it in a separate account, keeping it in a taxable account, and we actually recently just wrote up a lesson on a broker that kind of automates this that we're going to send out later this week that will touch upon this. So just keep an eye out for your inbox on Friday for that new lesson. And then Shake, for the question for you, Carl had a question regarding his P&L goals for the month to help him, get towards his yearly P&L goals. And he was asking if he's, holding a winner, should he take some off in that winner to achieve that monthly goal, or should he just kind of trade the trade, and if he fails, misses the goal, it is,
I mean, we all know the answer to this. Obviously, you shouldn't fuck up the trade because you have P&L goals. And this is my problem with P&L goals. I've done the whole goal thing my entire career where I try to make this amount a week, this amount a day, this amount a month. Trading is not a 9-to-5 job. you're not. It's just completely different. I know everyone has income goals and all these things, and it's good to have these goals. But at the end of the day, you take what the market's giving you, and you take what the setups you're seeing and provide and things like that. So goals are good to have, but in trading, performance goals, it's only gonna probably hinder your performance because you're thinking about the goal. It's like another way of thinking about P&L. You want to think about P&L as little as possible in trading. So, so just trade the trade is my answer.
Yeah, I completely agree. And I basically told him the same thing. I'm like, it's good to have that goal, but the stock doesn't care what your goal is. Like, you have to just trade that trade as it is. And the follow-up question kind of goes along with this, where this person, they're not working right now. Their main source of income has been trading. They are well aware that the market has been very easy, and their concern or their debate is, they're trying to buy a home. And they're like, can I use this income to cover the mortgage? And it's like, technically you could, but when you put that pressure of I have to make a certain amount every single month, it kind of goes back to what you're saying, where when you put that added pressure, you end up putting on subpar trades.
Well, yeah, it was like when I started my trading career and I was just trading for income. I had this tiny account, my back was against the wall, and every day was so manic, every day was so important, every trade was so important, everything. It was just so much more emotional when you're doing it that way, when you need the money so badly, you need to perform right now so badly. It just makes trading very difficult. I'm hearing a lot of people telling me that they think about like going professional trading, and it's always after the IWM goes or whatever it goes, 75% in a few months. But I mean, you're not doing anything right now. You're not working. Why not? If you're sitting at home anyway, you're trading anyway. I definitely don't recommend trading for income out of nowhere to start. But I mean, if you kind of have no choice, then why not?
Yeah, and we'll jump into some of the social media questions. We've been getting bombarded with DMs regarding GameStop and BlackBerry and AMC, all these recent short squeezes. So I know you had a little take on it yesterday. If you want to kind of bring us up to speed with what's going on with those three.
I mean, the classic Wall Street bets is going off. Andrew left to Citron Research. He used to be this big dog in the market. He used to be like a guy that, when his name, he was like the candy man. You say his name, you get a little fear in your heart. But he started calling out this GameStop at 40. He released a whole short thesis, and he's just got fucking crazy squeezed. He said he's still short, so he's done. And we're going to see funds start going under, because like right now he's very wrong in the trade, correct? But because he has a name, because he's a famed short seller, and because it's him versus Wall Street bets, he's still in the trade. He's going to lose fucking 300% on the trade because his ego's involved now. So, I mean, don't touch these things now. There's nothing to do with them, but definitely an interesting little storyline going.
Nice. All right, so if you want, we'll jump into some of the good trade, bad trade. First one, we got Tom Ramsey, and then we'll go into some of our own trades. So the first one for Tom is this TME. I don't know if this is one that you called out, but this was just textbook bull flag breakout that he sold into that high, 38% gain, and he still got some. So it's just phenomenal trade so far from.
Yeah, we're seeing names just continuously do this stuff. It's crazy.
Yeah. All right, so Sheik, do you want to go over some of your good trades and bad trades for the week, and then I'll go over some of mine?
Sure, I'll just go over mine quick. This NNOX is the best trade of my career right now. I locked in a ton yesterday. We bought here this like 55 area. All right, so this is actually my bad trade last week, and I can't open up my platform because it messes up the recording. But so last week, this is my bad trade because where did I buy this last week? I got too heavy before I saw confirmation. Where was it? It was this day right here, and I needed to see that breakout then. And I didn't see the volume confirmation. I bought all my stock at once. It was more like I want this to happen versus I'm seeing this happen. And then the other day where this was a good trade, I started buying this 53 and I bought all the way up to 55. And it was like, it's only a few minutes that you're making these decisions, but just seeing that consistent volume come in, that's what you need to see when you're buying these breakouts. And that's what made this such a great trade versus it was a bad trade last week because I added when I was seeing that volume confirmation. I sold a bunch yesterday between 72 and 73. I still have a big chunk. I think this one's got legs. It's just a very wide name. My bad trade is tough. Oh man, PLTR right here. I got stopped out on this tail right here. I was so focused on the NNOX, I didn't even realize. I was just sitting here in this flag, looking to add. Didn't have a ton of size or anything. But then I look up. I didn't even realize I didn't have it. The stock's at like 30. and I didn't have any stock the next day. So, that's tough getting shaken out. Definitely should have had a wire stop, given it the proper amount of room. Then I'm still in the trade. But what you got?
And I think I had one more I wanted to touch on, that T-Doc. I know you've been mentioning the last couple of weeks, and it's it's starting to break out to new all-time highs. If you want to.
Oh yeah. I mean, this market's just. I'm not trying to be like a fucking dick, but this is the easiest market I've ever seen in my life by a billion. Like every setup is just working out to the upside with moves like this, like the PLTR move, the KC move, the NNOX move. We're seeing these moves all over the market, and I could type up a million other names. It's just like enjoy this market while we got it. Like I'm not taking any time off or going on any vacations or anything because I'm just trying to be in front of the screens every day until we fucking see that sell off. That's inevitable at some point. But yeah, this T-Doc. I mean, I bought it here, this 200 area in the long-term account. Then the active account, I bought this 230 area. I started taking profit yesterday. It's just these names are going insane.
Yeah. All right. So I'll go over some of my trades. If you want to pull up the first one, is this Snow. The next one over. Yeah, so this was just like a day one, just kind of shakeout. Just saw it kind of getting tight. Bought it up through 290, and I put a stop below that little pivot, and it just shook me out. A couple % loss. So that was the one that failed. Next we have Amazon. I'm gonna scroll over. Amazon, we were just trading the range that it's been in recently. I had a buy stop in above. It was like the 31.50 first that prior high day, and then the next day just gapped up, so I got filled a little bit higher, and then as it ran into 33.50, which has been prior resistance, couldn't really get above that. We have to stop, and I just took the profit in that. Next over we have Facebook. Similar, again, just we're trading the range. We saw Facebook come into support. We saw it hold support. We bought on the way up, and we saw it as it has earnings, I believe tomorrow. So this is just again a trade I'm taking into before earnings. I'm getting out of it, and as it ran into resistance, similar like Amazon, just took the trade, took the profit, and moved on. And again, into earnings, whatever happens, I don't have to worry about it. Next up, we have Google. Again, very similar trade. Again, we're buying up off support in that bull flag as it broke out to new all-time highs, and then up to stop and got stopped out, just to get out of all these names before they report earnings in a few days. And then lastly was this NVR that I actually just got stopped out of a few moments ago. This was a name. You just gotta scroll over one more.
Doing these things, the market's open, man.
Yeah, I know. So again, similar theme. Again, buying up off the support and then looking to sell into resistance. And we've gone over plenty of lessons of when the stock retests that first high, often gets that resistance, and that's what we're kind of seeing today. It flushed through new all-time highs, and we started to see some people starting to sell. So this was like an easy 10% trade. It was bought up off of support, sold into resistance, and can avoid earnings that are in 2 days. So the main theme for me had just been buying up off support, trading these ranges, and then taking the profits before earnings and moving on. That was my main lesson for the past week.
Nice.
And then with that, we can jump into top ideas for the week.
We have a ton of earnings. We got Apple, Facebook tomorrow. We got Microsoft today. So we're going to start seeing earnings setups coming around. So this isn't really the super do a ton time for me. This 4 is shaping up nicely. Nice little flag at highs. They have earnings coming up though. And then this gray is a really thin name. Very thin name, but it's setting up below 35 really nicely. And the way these like thin recent IPOs have been going, definitely want to be involved in every one of these setups that matriculates, if you will.
Nice. The only other one I'm looking at this DGX up through 126. Again, it has earnings on the February 4th, so this will be just a little trade up through 126 to kind of be in for a 128 breakout. But again, looking to get out before earnings, so we're trying to hold through that. So that's just other one on the radar. I think with that we can jump into book of the week.
I'm reading this book. It's called 100 to 1 in the Stock Market. It's an old book. I forget what year. Tom Phelps. I think he wrote it in 1940 or 1950. And it was all about, I'm only a little small way through. It's more about long-term holds and things like that, how you get 100 to 1 winners. And this is having like a 20, 30 year outlook. So his thing is like buying really cheap companies where their earnings are like multiple, like 4 times what the company's worth type thing. So you can tell it's a really old book. It doesn't have the classic principles of like how to trade in stocks or something like that, where it's like super timeless. I'd say this is more fundamentally driven, and in this market, that doesn't really mean much at this given time. It'll come back eventually, but so it's pretty good. 100 to 1 in the stock market. I got to read some more to give you some better tips.
Yeah, I think even kind of going off that, like again, you mentioned it's a little bit of an older book where now that trading has become much more mainstream, much more popular, we've seen a lot of these drastic moves happen much quicker, where again, it might, instead of it taking 20 or 30 years, we've seen names like Shopify that in 5 or 6 years can have those 5 or 10,000% returns. So yeah, just trying to find like those long-term winners. What I'm reading is kind of similar. It's 100 Minds That Make the Market. This is like the top 100 traders since the day of time, written by Ken Fisher. It's a very popular trader and investor. So I'm in the kind of the beginning stages, the Rothschilds and the Morgans, kind of how they kind of shaped our economy. But nothing really trade specific. This is kind of just broad, more of a biography of these important traders that shaped Wall Street to what it is today. So this was actually, they referenced it in the Just Live More book. This was like one of the references in it.
Nice.
So, just going down the rabbit hole.
There you go.
That. All right, so I think we wrapped up this week's chart talk.
All right, another one in the books. All right, guys. Like, subscribe, all that goodness.
Right now.
Catch you next week.
You're nuts. I want to find out how I wound up in the hospital. Is that in there?
Yeah, it's in there. Guys, one time. Deal?
Deal.
Deal.
Okay. Oh, dear Lord.
That's classic.
Hopping that window, I got places to go. People to see, time is precious. I look at my Cartier out of control.